So we move to chapter 4, labour, an important chapter for us and certainly very, very examinable. The examiner likes this area. Let's be clear here in section 1 on the distinction between direct labour and indirect labour. In terms of definitions, we see very clearly direct labour, work is directly attributable to producing a product or a service. We can attach this labour very, very easily, quickly, and simply to this particular product or that particular service. Now, in terms of indirect labour, as you would expect, it's not directly, easily, or simply attached to the production of a product or service. Does that mean that it won't necessarily affect the cost of the product or service? Well, it may do in the form of some sort of attributable element. Now, moving to the next area, let's look at recording labour and indeed the labour account. Now, there's a lot of detail here that doesn't tend to get examined, this particular area. So, when we think about the recording of labour, clearly what we're talking about is time. So, reasons for recording labour time spent, as we can see here, is that employees will generally be paid for the hours, for example, that they have spent or worked. In addition to that, perhaps time can be charged to a specific job or indeed a client. Now, some examples of that, let's say in terms of employees, you may be familiar with, say, timesheets, commonly used, for example, solicitors and accountants, recording the number of hours, in fact, more likely minutes, and allocating that to the particular client. Outside of that, possibly job sheets, often known as task-related timesheets, and used to list time on a particular job, let's say by several employees. So really what we're looking to do is account for the total time across the board in relation to the particular job. Now, in terms of recording labour costs and account, this area for me is very, very detailed for MA. What I mean by that is that there's a reference to double entry or debit and credits and indeed T accounts. And I think the most important area for us really is to get an overview. We know that businesses incur costs on labour, salaries and wages. And we know that there are deductions invariably from gross salaries, for example, in the form of social security or national insurance in the UK. So really, wages control is made up of a number of elements. The net pay is paid to individual employees, and obviously any taxes or PAYE, social security contributions or national insurance are paid over periodically to government bodies, tax jurisdictions. Now, the paying of the wages, the simplest entry here. In terms of double entry, let me explain very briefly. A wages control account is really a job lot account. In other words, an account where we bring in a variety of labour associated costs. We're looking within the wages control account to control all wages. And this first entry is very simply the payment of the net wages to staff. So we're debiting the control account and crediting bank or cash, which is an asset. So we're really reducing, in effect, the asset of cash by crediting it and increasing what you might call a sort of a control expense account, i.e. the expense associated with wages. Now, there's a lot of detail in the chapter about accounting for these areas. For me, if you look at past examination questions for MA, they're not regularly examined. I draw you to them, but for me the MA exam is not really focused, unlike perhaps FA, on a real deep knowledge of accounting. What I would draw your attention to, though, is this final area, the wages control account that I mentioned up top. And what you'll see here is that all of the entries relating to wages and the associated entries are all shown within this account. So as I've mentioned up top, the wages control account really houses not just perhaps work in progress, some element of indirect labor costs, etc. And indeed on the left-hand side, the various deductions in terms of what's been paid out in net wages, which was Journal 1, and indeed what's to be paid or paid out to the tax authorities. So really here we see the bank entries, and here we see what's due and indeed the statement of profit and loss account entry. So in essence, once we control the account, the wages control account, this is the entry that will be taken to the profit and loss account as the total wages charge, but it will be controlled in this account. In other words, balanced, because the two sides should balance, with this element being the total. So moving from there, when we think about remuneration for labor, obviously a variety of different choices, and certainly over the last 20 to 30 years, remuneration packages have changed. If we look at time-based systems, let me just make this a little bit easier for you to read. If we look at time-based systems, then clearly, obviously, things like, salary and indeed wages are areas that we're familiar with. Salaried employees will be paid more likely a given agreed amount per month. Wages, slightly different. Waged employees possibly paid at some sort of agreed hourly rate, depending upon the hours that they work. So note the difference between sort of monthly salaried employed and wages generally paid by the hour. Outside of that, you're familiar, I'm sure, and I hope that you do get overtime premiums for work done to persuade workers to work outside normal hours, normally in addition to standard pay. Now, in terms of sort of simplicity, certainly, time-based systems, pretty simple, simply based on hours, more likely times a rate, whether or not it's a monthly rate or an hourly rate. Outside of that, probably fair because everyone is paid in the same way. There is a standard rate or a standard hourly rate, and that is what you get. What about disadvantages? Well, with standard rates, whether they're salary or wages or let's say even a overtime rate, there's really no incentive because everyone gets the same. There's no incentive to differentiate yourself from the next person. Outside of that, in effect, everyone is basically paid the same. So some advantages and indeed some disadvantages. What about piecework? Does that solve the system? Well, first off, what do we mean by piecework? Well, two different types of piecework. Firstly, straight piecework. So really what we're talking about there is just a set amount for each unit. Okay, so you produce 10 units, you get an amount, a rate in effect associated with that unit. What about differential piecework? Okay, well, employees are paid different rates per unit depending upon how many units they have produced. So in effect, they may be rewarded for higher rates as the production level increases above agreed targets. So if you will, there's an element of incentive there, okay? Moving from there, in terms of incentive-based systems, you may be familiar with these. Obviously, incentivizing employees to work harder is certainly something that employers want to do. So this is all about, I guess, paying a bonus linked into some sort of target. It could be down to the individual themselves or possibly a group. So a simple example of an incentive scheme would be commission, possibly commission-based sales. In terms of advantage here, clearly efficiency is being rewarded. And then outside of that, you may well find that because there's a bonus, because there's an easy way to make money, more skilled people will be attracted to being paid in this way.